This is going to be a pretty informal video. I'm going to just go over the basics of turtle trading, which is the opposite of traditional trading in a certain way. And that certain way is generally everyone says you need to buy low and sell high. Turtle trading says you buy high and you sell low. That's still profitable because what you're doing is you're essentially capturing a rally. You're waiting for that rally to happen and you're capturing it. And once that starts to sell off, then you're selling it. So the turtle trading rules are essentially this. You wait for a high and you buy it, attempting to capture the rally, and then you wait for a smaller sell-off and take your profit at that point. There are two sets of turtle trading rules. One is buy something when it hits a 20-day high, and then sell it when it hits a 10-day low. And the second strategy is buy it when it hits a 55-day high and sell it when it hits a 20-day low. Now, what I have done is back-tested these strategies to see if they still work. And we're going to go over some examples. I haven't actually looked at the details here. I have just run the back tests and exported their images, so we're going to look at them together. Does turtle trading still work now? We will start with gold. And I've chosen gold because it trades like a commodity. It has its rallies, it has seasonality, and if turtle trading really works, what we'll see is that system capturing the rallies, taking profit before the sell-offs, and hopefully beating just buy and hold. So here's gold. The GLD is the gold ETF, mimics holding gold as a commodity, and we are looking at it from 2005. Now, I have back tested it with the turtle trading system using a buy at a 20-day high and sell at a 10-day low. And here are the results. Zoom in a bit. So you can see what's going to happen here is you're going to slowly go up. You're basically missing that volatility that you'd get from buy and hold. You're missing these downtrends. However, if you look closely, you could probably put them side by side here. If you look closely, you're going to see that you're missing a lot of the rallies too. See how gold really spiked here? You don't really get that in the turtle trading system. And the reason is you're getting in a bit late. With a buy and hold trading strategy, you're going to capture the full rally, of course. But with turtle trading, you're getting in after the rally has already begun, and you've probably missed a chunk of that profit. So let's take a look here. If you see at the left-hand side where it says open, high, low, close, percent volume, percent change, that percent change is the total ROI you'd get from this trade, from buy and hold, and you'd have a profit of 274%. Now, if you look at the turtle trading system, you would only have made 80%. So clearly, turtle trading does not work. This particular strategy does not work on gold. But let's take a look at the other rule, where you buy at the 55-day high and you sell at the 20-day low. And we see actually it does even worse. You're only making 60% ROI. And that's because this is a slower strategy, it's more conservative. And again, you're missing the beginning of that rally, which often is quite strong and probably stronger than what the originators of turtle trading had thought. They probably were thinking that the bulk of the rally comes at the tail end, which isn't always true. Let's move on to the Nasdaq, and here we're looking all the way back to 1999. And again, we're going back to the 20-day high buy and 10-day low sell strategy. Now here you can see that this strategy is not so successful in the long run. It's pretty flat. But it did manage to capture that late rally. So let's go and take a look at QQQ. And you can see back to 2000, I think is where we're looking. Back to 2000. The charts do look pretty similar. But our profit here is 635%, whereas in the turtle trading system, it's not even 200%. Clearly, we're missing out on a lot of rallies here. Now, what about the short side? The turtle trading short side is exactly the opposite of its long side. You take a short position when a stock hits a 20-day low, and you buy to cover when it hits a 10-day high. So I did the short side of QQQ, and you're losing money, but you're getting these huge profits on the sell-offs. You can see the sell-offs are, they're not really pushing you back after all these losses. You're maybe recouping 50% of your losses. It's just not worth it here. But let's look at the SQQQ, which is the inverse QQQ, and let's see how you would perform if you had buy and hold. Clearly you'd be losing everything. You'd lose 100% of what you had, basically, if you had bought in at the beginning. But for the short position, you're not getting that drawdown. You've only lost about 60%. So what this tells me is that turtle trading is probably a more conservative style of trading rallies and sell-offs. You don't get the bulk of that movement, but you're also not exposed to considerable drawdowns. Now let's move on to dust. So going back to gold, gold didn't really work out well, but dust is an inverse on gold. So we should see something similar to what we just saw with the QQQ, and we do. You've only lost about 80 or 70% of your holdings here using the turtle trading system, but if you were to trade dust and buy and hold, you would have lost pretty much everything. So this might be a useful trading system if you want to use it only on the short side, so as to protect yourself. But let's see how it'll work, how it has worked in the past year with the SPY. So this is just over the past year, and you can see that you would have made a profit of about 15% on the SPY. But the year to date performance of the SPY is above 15%, it's 25%. So again, you're basically moving in the same direction the stock market is moving, except you're not capturing all the gains there. The upside of this is you're not getting the drawdowns either. If you want to take a look at the transactions this year, you're making about one trade per month on average. So it's a pretty slow trading system. I would prefer to just trade seasonally if I'm going to trade once per month. I don't think this momentum style trading strategy really works out that well in the end. But let's take a look at some individual stocks anyway. I'm going to look at Baba, Apple, and AMC because perhaps it'll work. This strategy will work on meme stocks. So here is Baba going back to 2015 with the 55-20 strategy. And it seems to have worked out pretty well. But let's check out where Baba is today. And you would have made 50% with buy and hold, and you would have made over 100% with the turtle trading strategy. So this really just tells me that it works on some stocks. But again, if you want to explain it by just looking at this chart, I'd say the real advantage was missing this not holding during this pullback, because you get out early. So you'd get out during the 10-day low and you'd miss the rest of this pullback. For Apple, the same strategy. This is year to date, by the way. Same strategy would have produced a loss. I think I'm pretty sure Apple's up year to date. So turtle trading doesn't seem to work very well in Apple this year. Yeah, we are up 16%. And finally, let's check the meme stock AMC year to date. This turtle trading strategy, the 2010 strategy, would have produced about 30% profit. You see, you did capture that that short squeeze that occurred after the GameStop short squeeze. Let's see where AMC is today. You would have missed all of that 1000% gain. You wouldn't have captured any of that. You got 30%. So to me, it looks like turtle trading is not very effective, except for perhaps if you want a more conservative momentum strategy as opposed to buy and hold. Otherwise, I'd probably stay away from turtle trading. I know it's a pretty popular topic. If you're into trading, you're eventually going to come across this term. So anyway, this video is my little announcement to you to show you that I have already backtested turtle trading. So anyone asking me about turtle trading, I'm going to direct you here and say, look, I've backtested it. It's not that good of a trading strategy and I'm not interested in it. If you like momentum trading, there are much better ways to do it. As far as I can tell, turtle trading is not going to be very useful for the upcoming year.